Welcome to the Fintech Times News and Views podcast. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report on the latest and brightest ideas from the fintech world. Follow the conversation using hashtag TFD News and Views and follow us at the Fintech Times. Hello, and welcome back to the Fintech Times News and Views podcast brought to you by Vanta. Vanta helps you save time, money, and build customer trust, all by centralizing program requirements and evidence collections for frameworks like Dora. If you want to manage risk, prove security, head over to vanta.com/fintechtimes to learn more. But we are back. We are finally back. The gang is all together for the first time in 2025. I have Francis and Tom here. It's great to be back, guys. How are you doing this week? Tom, haven't seen you in an age. How are you doing?
Oh, nice. Good to be back. I feel like it's been an age as well, because we've had a bit of time off over Christmas. And yeah, I just was ill last week, so it's good to be back with a bang now. And things are finally starting to speed up in terms of the news incoming. We've got loads of good stuff to talk about. And yeah, it's a good feeling. And we're finally into sort of the kick of things in January now.
Love it. Love to hear such positivity. Francis, how are you doing? How things with you?
As predicted last week, things have actually picked up a bit now. It's not as quiet as it has been. Still not 100% back to the way we're used to, but it is going to be getting there very shortly, I imagine. It's been a good week though, and yeah, looking forward to the conversation today.
Awesome stuff. Yeah, they do say be careful what you wish for, and we wished for a busier industry, and now we're getting it. But that is great because it means we've got plenty to talk about. So, Tom, what article are you going to be talking about today?
So this week, the UK announced its AI Opportunities Action Plan. So I'm going to be talking about some of the first reactions to that.
Awesome stuff. And Francis, how about you?
So my article today is on payment preferences and looks at some of the latest research by PXP.
Awesome stuff. And my article is going to be looking at how fintech is once again the most funded sector in the UK in 2024. But Tom, since it's your first podcast back after a while, I'm going to get you to go first. So why don't you take it away?
With pleasure. So, yeah, as I said, on Monday, the UK Prime Minister Keir Starmer unveiled the AI Opportunities Action Plan. And basically, the action plan is looking to establish the UK as an AI superpower to help enhance services and growth while creating thousands of new jobs. So through this plan, the UK government is essentially looking to ensure that AI helps drive economic growth, benefits working people by improving healthcare and education, and increase the prevalence of AI in people's working lives to ensure it creates new opportunities instead of threatening traditional patterns of work, as many still fear now. So the Prime Minister basically detailed that AI can help enhance the lives of working people across a wide variety of industries. As we already know, some of the examples he gave were from helping speed up planning consultations to speed up building work and reducing admin for teachers, all the way to helping cameras spot potholes to ensure that our roads are kept in better condition. So the plan basically hopes to achieve this by enhancing AI computing capacity and establishing AI growth zones, as well as really bringing in a lot more investment into the AI sector. And obviously, the UK is doubling down on AI, and it's basically hoping to firmly establish itself as the go-to world leader for the sector, really. But as it faces significant competition across the globe, you've got to think of, especially the sort of competition from the US, which I'd say is the world leader at the moment. We kind of, in the article, we were reaching out to industry experts to find out whether they think the action plan is actually ambitious enough. Like, does it go far enough, or is it just kind of going to leave the UK kind of not quite in the lead, but not far behind? Or is it going to really, propel the UK to become that world leader that it says it hopes to be? So with this in mind, I really just wanted to get your guys' take on, first of all, just the plan overall, and whether you think the AI or the UK, can generally become the world leader for AI innovation and investment, or do you think it's too overambitious to try and compete with the current leaders like the US? Polly, I'll come to you first. What do you think?
Thanks, Tom. Yeah, I think this is really interesting. I think it was interesting when I saw the story sort of break earlier this week in terms of Keir Starmer's plan to bring AI in. I think it's it's a good plan. Is it too ambitious? I don't know. I don't think you can ever be too ambitious when you kind of are coming up with action plans and things like that. I don't think it's unrealistic to want the UK to be an AI superpower. Whether it'll get there is sort of a different question entirely, but I don't think it's I don't think you can ever be too ambitious when it comes to things like this, especially I think, when we're thinking about the government and it being a new parliament and all sorts of things like that, they're all trying to look to make it, in their first sort of however many months it's been since Labour came into power. I think there's definitely been an element of they're trying to really boost things, keep things moving along and show that they are making action. And I think it's interesting because I think the problem, I don't necessarily have any issues with the plan itself. I think the problem that I can see is that AI kind of has a bit of a marketing issue, which I know sounds really weird. But I think AI, obviously, we all know, AI has been around for ages. We have been talking about AI for a long time before it entered this kind of consumer knowledge. So obviously with ChatGPT and kind of AI being a really big buzz at the moment through sort of different implications and different softwares in like putting AI out as a thing. I think there's an element of AI has a bit of an issue because I think some people love AI. Some people think AI is amazing. Like it's such a cool tool. You can use it and things like that. But then I think there's a certain sector of people that are kind of done with AI, and I'm certainly one of those people. Like I recognize that AI is a really useful tool for a lot of things, but I think AI is kind of becoming such a massive buzzword at the moment that everyone's kind of trying to shove AI in where it doesn't belong. And I think, Francis, we talked about this last week or the week before in another podcast about this kind of idea that AI is just being sort of shoved here, there, and everywhere in places where it doesn't necessarily belong. And so I think there's a bit of a tricky situation here in terms of like what can AI actually be useful for and be good at, and how can AI help enhance the lives of people in the UK and enhance different processes, like you say, speeding up building work or, spotting different, like the pothole thing or like admin and things like that. That is obviously great ways that AI can be used. It's when you start getting into the other side of things where it's like, is AI going to start being used in places where it doesn't necessarily need to be or where it isn't very good at being used. Like one like really random example obviously is like AI generated pictures, AI generated images, art and things like that. Not very relevant, I know, to fintech, but that's something that you see quite a lot of people doing AI generated images, and actually it looks terrible and it's taking a job away from, an artist or a creative person, things like that. So it's a really tricky situation. I think it's really great to see the Prime Minister putting a lot of stock in AI, and I think it'd be interesting to see where AI goes, because obviously AI is the thing right now, so I think it would be silly to ignore it or pretend that it isn't a major player when it comes to sort of any industry really, not just even within fintech as we know it. But I think it is interesting, and I think AI has a lot to offer, but I'm just very cautious as to what it is that it's gonna offer us. Does that make sense?
Yeah, I think you make some really good points there, and I think the first thing you said was that you can never be too ambitious, and I completely agree with that. I think it needs to really try and become the world leader by being as ambitious as it can really. And to your point about whether there are certain things that AI isn't particularly really good at, and is it going to actually be detrimental to certain industries that are trying to shoehorn AI into it? I think that's right now it's a very interesting point, and it's one that's I think it's definitely the case for some companies that are trying to shoehorn AI into certain things. When you see even just the case of companies putting copy out on LinkedIn or in their marketing campaigns, you can see which ones have been generated by AI and which images are AI. They're still quite distinct, but even now I think we're seeing quite significant advancements in terms of image generation, video generation, and I think while we're a long way from being I can't tell which one's which, like which one's AI and which one's not, I also think maybe we're not as far away as I'm thinking. Like in 2 years time I think we could easily be looking at videos and not know, say on social media, and not know which one was which. And I think the speed at which AI is kind of advancing probably means that it's really good that the UK is getting sort of a step ahead of that before it really reaches that point. It's trying to establish itself as the world leader, get these huge data centers going across the UK. And I think that, hopefully will make a huge impact and really go towards making it a world leader. But Francis, what's your take on this? Do you think this plan is good enough, or do you have some other thoughts?
Yeah, I've got a few thoughts on it. I think kind of like what you both were saying, is that there isn't anything as being too ambitious. I mean, you have to have an idea and a goal and know what you want to achieve, and it's better to sort of aim for more than for less, right? You want to try and overachieve than ever underachieve. So I think saying that, this is our goal, and sort of saying this is what we want to achieve, I think is like first and foremost really important. But one of the things that stuck out the most to me in the article was a quote actually from Carsten Young, head of AI at Institute for Public Policy Research. He said our research found that AI could either lead to 8 million job losses and no GDP gains, or no job losses and GDP gains worth up to £306 billion a year. And that really got me thinking about the idea that it's about how you utilize the tech. The tech itself isn't bad. It isn't something that we don't want to see in our everyday lives. I mean, the way that ChatGPT is sort of can be used can be really beneficial. But I think the issue is when people rely on it too much. And I think this is kind of to Polly's point about, AI generated images taking away some help, or some work, I should say, from an artist or something like that. I think an artist might be able to sort of use ChatGPT as a background thing, and then have like the human touch element of their specialty of what they do to add to the service and make the product that much better. So in terms of actually speeding up a process, I think that's where AI can really be beneficial. I think that's especially true in the fintech sector, because in a tech sector, you're obviously going to try and automate as much as possible to make things as simple as possible, whilst also making them secure and trustworthy. And I think ultimately what I quite liked about that quote is that it's not necessarily about saying AI is going to replace jobs, but it's going to create jobs, because it's going to need people to monitor it to make sure it works okay. So it's just about sort of getting out of the mindset that this is a replacement thing, and rather that this is just a new technology and it's going to need experts to make sure it's working at its best capacity. And that's no different than what we see today. It's just people might have to sort of adjust what they're used to, and be open-minded to taking on learning about AI and stuff like that. And I think if the public is probably open to it, then investors are going to see the opportunity, and then I think the plan is more likely to be achievable. But in terms of like its ambitiousness, I think it's within reason.
Yeah, I agree, and I think overall it's just a really good sign that the UK's positioned itself, ahead of the curve with moves like this. It's obviously recognised the huge amount of investment that it can bring in, and it basically wants to try and get as much of that into the UK rather than other places to support its economy. And I think we can all agree that's probably a good move. And as all of us are living in the UK, I think we're all hoping that this kind of initiative can succeed, and it's brought in correctly and in a good way that's beneficial to everyone. But I think we've wrapped that up nicely. We've made some good points, and obviously speaking of the UK, Polly, I think you've got a UK related story as well that we could get into next.
Yeah, absolutely. What a beautiful segue that was. Yeah, so my story is all about how fintech is once again the top funded sector in the UK in 2024. So new research from HSBC Innovation Banking UK and Dealroom has shown that UK innovation businesses ended 2024 with a combined 1.3 trillion in enterprise value, which was a 20% increase on 2023 and has increased 9 times in a 10-year span. So I thought this was just a really interesting to kind of speak about and to kind of understand sort of what the funding is like. Because I know sort of we've talked previously about how challenges at the moment within the fintech market and what are holding fintechs back and what are holding startups back. And a lot of the time it is funding. However, it's really interesting to see that actually the funding is still there, and that the UK fintech sector is doing very well in terms of it's the most funding sector with over $3.9 billion in VC investment, which has overtaken climate tech, which was the top spot in 2023. So this is obviously really significant, and I think it's really interesting to see that, despite the challenges that they're facing, there is still that appetite there in terms of the funding, and there's still, the funding is still out there. I think people just have to go and get it. And obviously I think there was a lot of this in terms of, was driven by some significant rounds, some very big funding rounds, including Monzo, who did an absolutely massive funding round of $448 million and then $119 million, as well as World Remit, who did a funding round for $267 million. So, it's huge. And I think it also kind of ties into what we were just talking about with AI. And AI has also really sort of seen a boost in terms of funding. And UK AI-focused venture-backed businesses raised $4.2 billion in VC investment in 2024, which is a 31% increase from 2023. So over a quarter of all venture capital was raised by AI startups in 2024, which is absolutely massive. So it kind of goes to show what we were just saying. Obviously, there's a huge appetite for AI, and sort of as a consequence, there's a huge appetite for fintech as well. So I kind of just wanted to sort of get your thoughts on this and kind of see what you think about the UK economy, how we're kind of going in terms of innovation. I guess I kind of want to look ahead, I suppose, to 2025 and that we're in right now, but kind of sort of think about how, obviously it has been a tricky couple of years for fintech. I don't think it's incorrect for me to say that. It has been tough. It has been a challenging market for a lot of reasons, but are we kind of going to see a bit of a turn? Is there going to be a bit of a positive side coming in, especially with this huge share of investment? So, I'd love to hear your guys' thoughts on this. Francis, I will go to you first. What do you think?
Yeah, overall, I think it's all really encouraging. And I think, especially, I think it was like towards I can't remember if it was the last episode that we did of last year or the first one of this year, where we were talking about predictions and sort of reflections on the previous year. Yeah, it's interesting to see how many people are talking about fintech investment sort of really taking off again in 2025. And I think once you see like these sort of stats, I should say, where you see that that fintech really is back in the spotlight, it is number one, it's what people are interested in. It really, like, when you take that attitude and combine it with the fact that the economy is stabilizing ever so slightly, investors are looking to sort of open their wallets a little bit more to invest and put more money aside than they have in new ventures that they previously might not have done due to uncertain times and so on. So I think it is all in all like a really encouraging thing, and it's especially working in the sector because we've seen sort of almost pulling a parallel to the crypto world. We've sort of seen like the lows that it can really get. I mean, we saw how low crypto got, but sort of just making sort of a parallel to the fintech world in general, sort of post, the COVID hype, we really saw like big dips in 2022 and 2023. So starting to see that rise again, it's encouraging. And, there's no reason to really think that isn't going to continue. There's not sort of one thing that you say, once this comes around, that'll be it. No, it's that, we're going to continue to see more innovation. And, on that topic of AI, we'll see, new innovations that are integrating things like AI, that are integrating things like crypto, stable coins, and, open banking or open finance, even like these things that we've sort of had in sort of like, I don't want to say sort of like theories, because they're obviously not theories, but they've been these sort of core individual products before. I think we're going to sort of see them start to merge more and more and become parts of our everyday lives. And the more that happens, the more investment we'll see in the sector. And so truly, I think now that it's back on top, it'll probably stay on top.
Yeah, absolutely. I think you've made some really valid points there. And I think, to a certain extent, growth leads to growth, right? Like, and I think when, like what we were talking about before, when it comes to like AI and things like that, obviously there's a huge growth happening there. And AI and fintech are often very sort of intertwined. And so with the growth of that sector, it makes sense that there's going to be a growth of the fintech sector. And then, like you were saying, Francis, as it kind of, with the economy and everything else kind of getting a bit of a boost as well, that growth then is going to lead to growth elsewhere. So it's kind of all a bit of a melting pot, really, but hopefully one that, like you say, is going to continue. And there's no reason why it shouldn't. I guess we all have to kind of just cross our fingers a little bit. But Tom, what do you think? Anything to add from your side?
No, I think you've made some great points. And I think the only thing that I really want to draw attention to is the fact that there's an increasing share of investment in UK startups being driven by international investors. And I think that's always just a huge sign. The fact that, when these international investors are looking, where do we want to invest our money? The fact that a huge amount of them are coming back to the UK as they were, say, 4 or 5 years ago it's so good that that's actually coming back, and that's a hugely good sign for the fact that the UK is kind of establishing itself as a leader again in terms of that. And I mean, even when fintech funding kind of took a dip, the UK was still amongst, one of the most successful in terms of, bringing that investment from abroad in. But I think this is a huge kind of, this uptake just shows that, there's still a huge appetite for fintech, from around the world that's based in the UK. And I think that's just a really good sign. And as you were saying, it surely just means to further growth in the future.
Yeah, 100%. I think I really like that as well, and I think you're absolutely right. I think we're coming into that point where I think things are kind of changing, and from a UK level, from a fintech level, from all sorts of different levels. So I think it's going to be really exciting to see what happens, which I know we say a lot, but I think it's absolutely true. But anyway, let's move on now to Francis. Why don't you take your article away?
Absolutely, thank you very much. So yeah, my article today is, I guess, a little bit similar. We're still looking in the UK, but we are now looking in the payments world, and specifically at a new white paper from PXP, which was called the From Cash and Cards to APMs Navigating the Payments Transition. And within the white paper, it revealed payment preferences, priorities, and frustrations of more than 4,000 consumers across the UK and US. So the report found that credit cards are preferred for online choices when purchasing a high ticket value item, while on cruises, customers also preferred making in-person payments with credit cards as well. Now, the reason I'm sort of bringing these credit card choices to mind straight away is because other than in these two instances, God, that was difficult for some reason, smaller ticket items were in person and online. Debit cards were the number one choice pretty much every single time. And the report also showcased the usage of fintech and digital payment offerings in comparison to traditional ones. And this is sort of one thing that I found really interesting, is that PXP found that the newer digital offerings, such as Apple Pay and Google Pay, were growing in popularity with younger generations, 18 to 24-year-olds. That's probably what we'd expect. But only 19% of them, just under 1 in 5, said that was their preference. And meanwhile, probably a little bit more unsurprising, only 3% of those aged over 55 said the same. Security remained an important factor for customers of all ages, with 52% of all respondents saying it was the most important thing they look for when choosing a payment method. And this rose to 62% for those over 55. And interestingly, the reason debit and credit cards may have been so popular was because of the safety they provide. 45% said it was the most secure way to make online purchases, with less than 5% viewing buy now, pay later as the most secure method. So, as I mentioned, I think it's very interesting that the amount of digital wallet users, especially in the younger generations, is just that low. Because when I think about myself and think about the people I know, everyone seems to be using their phones and Apple Pay and Google Pay way more than they do their cards. And I mean, that just might be a London thing. But then again, it is kind of baffling to me that it is just 1 in 5 people one in 5 people have mobile wallets as a preference. I thought it would be much higher. And secondly, the other thing that I wanted to really discuss with you guys is I don't see security being sort of knocked off that preference in terms of, what do you look for most in a payment method. I think nowadays everything can be paid so quickly, be it through PayPal, debit card, credit card, crypto, whatever you choose to pay with. It's going to be near instant, or at least it will feel near instant. And because of that, I don't think speed is as big of a thing. Whereas security, the amount of fraud that we're seeing, the amount of AI enabled fraud, even people are so worried about their finances being sort of stolen that they like using things that they know that are reliable, and in this case that's debit cards and credit cards. And for me, I don't really see that preference going away anytime soon. And in that regard, does that mean that debit cards will always be king, as they're like the established de facto payment method that isn't cash? Because obviously, cash is always going to be there. But is that ever going to change? Like, are we ever going to see digital wallets really take that number one spot, or is that just, I don't know, something is so established and ingrained in our current financial ways that it won't change? Tom, I'll go to you first.
I think these findings really, to me, highlight the difference in attitudes between different demographics. You think the fact that say over 55s are selecting debit and credit cards, primarily because of the safety and security they think they provide, is pretty surprising to me, because I think I have the mindset of, oh, credit and debit cards, physical cards are going to be a little bit less safe. You can lose your cards, you can leave it somewhere, someone else can pick it up, try and use it, through contactless payment or whatever. There isn't any authentication there, so therefore it's less safe. And that's not the only reason. I think the main reason I've personally, prefer using digital wallet, through my phone to pay for things, is just the convenience that it offers. But for me, I'm like, oh, that little bit of authentication is actually just an added bonus. It's a bit more safety. But I find it interesting that, different demographics don't share that opinion. So, those of an older age still believe in the security and safety of physical credit and debit cards. And I think that's really interesting as well, because, potentially that isn't necessarily the case anymore. Yet, because, as you say, it's what they're so used to, it's what they've used for the majority of their lives. It's the as you say, the de facto payment. It's like, well, that's the one that I'm going to use because I've used it and it's never kind of done me wrong in the past. But I do wonder, as just the kind of new generations come in, I wonder if, the people that are kind of our age, 18 to, 24 or 26, 27, as they kind of age and decide, okay, these digital wallets are my payment method of choice, whether that's going to be eventually over, say, 20, 30 years, become the de facto and eventually kind of take that crown off of credit and debit cards. But I think, that isn't going to happen in the next, say, 5 or 10 years. I think we might actually have to be waiting maybe 20, 30 years for the people that are our age now to age significantly, so that they're the sort of main demographic, if that makes sense. But yeah, I find the findings really interesting. And as I say, I feel like I say it's quite a lot actually with the findings, but I do find them a little bit surprising.
No, 100%. And I don't know why, but just when you were sort of saying that age range, and I looked at the article again, I was like, 18 to 24-year-olds, I realized that no one here actually applies to that anymore. Ever since we joined the Fintech Times, or since I joined the Fintech Times even, I was always sort of in that 21 to 24 range, and now that's not the case anymore.
Doesn't it make you feel old?
Yeah, it does a little
Wait till you
bit.
get to my age.
It does a little
I say
bit.
my age, like I'm not, like a couple of years older than you.
But no, I think that's a really interesting point, is that it's perhaps just a habit thing. People are used to using one thing, so they're not going to change their ways. And, like you said, physical cards can be stolen, whereas there is a level of convenience that perhaps when people aren't, or they haven't grown up with the convenience like we have, then you're going to be less inclined to sort of be swayed by it, I suppose. Whereas, for me, if somewhere isn't offering sort of a contactless mobile wallet option, I'm thinking, what is wrong with this place? And I suppose, with time, like you say, we'll probably see like a changing attitude. But yeah, I think you're right in the sense that in the next sort of 10 years, we won't see much change. The only thing that I find interesting is sort of like you say, in 30, 40 years time, it wouldn't surprise me if fintechs have sort of overtaken the traditional payment methods. But I think there is something quite unique about banks all offering debit cards and credit cards. Like, it doesn't matter which bank you're with, you know what a debit card is, you know what a credit card is, and they sort of function in the same way. Whereas I feel like with fintechs, they have so many unique offerings, which make it very situational to whoever is using the service as and when, that it might not be as easy to sort of say this is going to be the de facto best payment method, because, it's going to be so situational to what you're buying. So in that regard, I think it might just be interesting for a whole different reason, in that there is no de facto payment option. And in fact, there's loads of different ones. But Polly, what are your thoughts?
Yeah, I think it's really interesting, and I completely agree with you, Francis, in terms of like who isn't just using Apple Pay or like contactless on your phone, because I don't even know where my debit card is. That's how reliant I am on Apple Pay. And pretty much everyone I know who is also my age is also reliant on Apple Pay or Google Pay or whatever pay thing they might have on their phone. So I find it really interesting that it isn't more popular in these findings, like you were saying. I also find it very interesting, kind of echoing what Tom was saying, in terms of people finding debit cards or credit cards the most secure. And that's really interesting to me because I don't think I've ever thought about security in that way, which I don't know whether that's just me not being, I don't know, financially conscious or whatever, but I've never thought of my debit card being the most secure way to pay, mainly because my debit card is like the one way that I've had difficulties. You know what I mean? Like I had a potential what do you call it? A fraudulent charge on my debit card a couple of months ago, and had to stop it, had to cancel my debit card, get a new one, blah blah blah. So that's like the only time I've ever had any sort of issues in that way is with someone managing to get my card details. And I think it's interesting that older generations consider that to be the most secure, because to me, like you guys were saying, it is the least secure because it could get stolen. It's quite easy to get hold of your card details. I mean, some people are quite happy to just stand there and give them out over the phone, sort of thing. So that's a very interesting finding to me. And I think, yeah, like I don't necessarily have never thought of security in that way in terms of cards, but also maybe it's just me, but I've never really thought about security in that way in any time making a payment. I don't necessarily pick the most secure payment method or what I perceive to be the most secure payment method. If something looks dodgy, then yeah, I won't do it. But I just go with it. Maybe that's my problem. Maybe I need to be a bit more conscious online, a bit more savvy. Maybe that's why I had a fraudulent charge on my bank account, because I'm not security conscious enough. But yeah, I don't know. But I mean, I completely agree with what you guys said. I'm really quite surprised by these findings. It surprises me that not more people are using phone wallets and mobile wallets. But then I guess that kind of just goes to show you how many kinds of payment methods are out there and how sort of rich in competition this sector of the industry is, which can only be a good thing, I guess, is what we always talk about. So yeah, very, very interesting.
Yeah, I mean, I think you've summed it all up really nicely there. I think it's, something that we probably all didn't expect. It's comes a bit of a shock, but at the same time, it's an interesting shock. And it, like you just said at the end there, it's a reminder that there are so many payment options available now that, and it kind of goes back to what I said before, that it's now very difficult just to pinpoint one thing that's standing out above the rest. But yeah, I think going back again just quickly, what Tom said, 30, 40 years from now, I think that's when we'll see a clear change from these current habits.
The passage of time, the one thing you can guarantee to make things different.
The classic.
I know, right? But anyway, thank you so much, guys, for bringing those articles today. That does bring us to the end of our discussion. If you want to hear anything more about what we've talked about today, or anything else about the fintech world, head on over to fintechtimes.com, where you can read plenty more news and insights over there. And very quickly, let's do what I learned this week. So each week we learn so much new stuff, being on the Fintech Times editorial team, that we thought it'd be fun to share that with our listeners. So, Tom, what have you learned this week?
This week, I saw that the Lending Standards Board has announced new research finding that only half of BNPL users are actually aware of late payment fees at all, with even fewer knowing how much these fees might be. And I thought that was really interesting, just because it's a point we've made about BNPL for years now, and it still doesn't seem to be hammering home for a lot of people.
Very interesting. And Francis, what have you learned this week?
So this week I learned, well, for those that don't know, which would surprise me, but DORA, the Digital Operational Resilience Act, is going to be fully implemented by the time that this goes live. It's gone live today on the Friday. And apparently, according to some research from Orange Cyber Defense, 43% of UK financial firms will miss the deadline and could face fines of up to 1% of worldwide daily turnover for as long as 6 months. And that just came as quite a big surprise that many, or the fine would be that big for that and last that long.
And what I learned this week is that the gender pay gap across European financial services boardrooms increased between 2019 and 2023 from 31% to 36%, despite a wide range of efforts and initiatives to bring women's pay in boardrooms closer to that of their male counterparts. And this is from new EY research, so obviously not great, and we've got lots of work to do in 2025. But anyway, guys, thank you so much for joining me this week. It has been great to have everyone back together after a little break, so hopefully we'll be spending a lot more time together as we move forward. So yeah, have a great week, and I'll catch you on the next one.
See you guys next week.
See you then.
Thanks for listening to the Fintech Times News and Views podcast. Don't miss next week's episode, and continue the conversation using #TFT News and Views, and follow us at the Fintech Times.